Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the 4-hour chart of gold in front of us, and as we know that we had NFP non-farm payroll yesterday, and as a result we saw crazy moves in the market, and we were ready also, and that's why I warned all of you that if possible try to avoid taking any position during the news. And as you can see, this was the main reason. Just look at the amount of volatility. Okay, there was a crazy move in the market. If you look at the chart of DXY, there was a sharp fall on the chart of DXY as well. Though the NFP was positive, but the market reacted differently. So those who think that news trading is easy, probably today or yesterday you got a lesson. Then news trading is difficult. To be honest, in my experience also, okay, I personally feel that news trading is the most difficult form of trading, because news trading is full of manipulations, market factors in the news before then you see different moves. So overall, beginners, new traders, you should observe the market during the news, but you should avoid taking position during the news, because it takes a lot of time to understand how to trade during the news. So let's try to jump to the charts, and let's try to understand what is going on in the chart of gold and what are the trading opportunities for Monday. First of all, let's talk about DXY. So these minor support levels are gone right now. These levels are not valid anymore. So the next important support for DXY, okay, the next important support for DXY is around 110.40, this 110.40, 110.45, and the only valid resistance right now on the chart of DXY is 110.10, the resistance at the top. So this is the valid resistance, this is the valid support. It is better to consider these two levels as of now. When market will open next week, we will get some different levels, then I'll update you. Okay, but as of now, just keep in mind that this is your important resistance, this is your important support. Okay, and in case market breaks the supports and start falling, probably you know that your next important support will be 109.30, as we have already discussed in our previous videos. So this is all about DXY. Now let's have a look at the chart of gold. But before talking about the levels here, okay, I would like to show you one thing on the weekly chart. Okay, this is the weekly chart of gold here. Let me remove the drawings and just see. This is the weekly chart. Okay, so as you can see that there was a heavy fall on the chart of gold from here. When market reached the Fibonacci 50% retracement level, or the 200 moving average support zone here, market tried to take support and market bounce. In fact, for last month, okay, for 4 weeks, market is trying to take support at the 50 moving average, and we can see that whenever market has tested the 50 moving average, market is showing good amount of bounce, and the level is none other than 1620. Okay, so 1620, that's why it is working as a very nice support for the market. And to be honest, okay, market is still trying to respect the 200 moving average here. Okay, so there is a possibility that market will try to resume the uptrend, because market is not ready to go down that easily. Now let me show you the chart of daily chart of gold. This is 1 day. Okay, on the 1 day chart of gold, the most important thing is that we have a wedge pattern. Okay, you can see that we have a wedge pattern here, and usually wedge pattern is considered as a bullish pattern. So there's a possibility that market may go up if we follow the wedge pattern on the daily chart as well. So the weekly is pointing towards an upside, and the daily chart is also pointing towards an upside on the chart of gold, technically. Okay, not fundamentally, technically at least. Now here is our beloved 4 hours time frame, the normal time frame. So in this time frame, as you can see, the market has closed at the resistance zone. Yes, we have already discussed in our previous videos that 1970, okay, 1980, 85 is a resistance zone in the market. Okay, so market has just closed at the resistance zone. So market opening will be very, very important, because market opening will decide in which direction the market will move and what should be our next strategy. For example, if you see market going up from here, okay, let me be very clear. If you see market crossing the resistance and going up, I am talking about this zone here. Okay, if you see market going up, then if possible try to avoid taking any buy position, because see, usually on Monday morning, okay, we do not get to see much participation of the traders. As a result, okay, market remains slow. Yes, there are some exceptions as well, but usually market remains slow. Okay, so if market shows a breakout kind of a scenario, and if you see that the size of the candles are not very convincing, not good enough, try to avoid taking any buy position. Because see, on Monday morning, okay, it can be very risky to take a buy position at a breakout. So the safest trading opportunity will be if market goes up and comes down. Okay, I'm talking about a retracement area, then you can go for a buy. So if market retraces, if market comes down and takes support around 19, sorry, so 19 I'm still stuck in 19 level. Market takes support around 1680, 1670 level, not 70, 75 level. It means that this I'm talking about this whole level here. Okay, this is a retracement zone here for the market. If market goes up, retraces and bounces, if you see a proper retracement or pullback, you can consider a buy position. But considering the Monday and the unusual dullness in the market, okay, it is better to avoid taking a trade at the breakout. And yes, the resistance at the top is 1702, 1705. This is the next resistance for the market. So on Monday, if market goes up and reverses, or if you see a good reversal from 1702 to 05 level, you can consider a sell position. In this chart of gold right now, okay, 1720 to 28 is the most important resistance zone, and at the bottom we have 1620 to 18. I mean, these two are the levels that have the potential to reverse the trend of the market. See, not all levels have the potential to reverse the trend of the market. Probably you have heard me saying that if market reverses from this level, you can look for a profit of 30-40 pips. So if market reverses from 1702, 1705 level, if you see proper price rejection from above, you can take a sell position and you can expect a profit of 40 to 50 pips, because this is the potential of this level here. Okay, but when it comes to 1720 to 28 level, this is a very strong level and you can look for a trend reversal as well, just like we are witnessing trend reversal from the 1620 to 18 level. So these two are the most important levels on the chart of gold right now: 1720 to 28 at the top and 1620 to 18 at the bottom. But market has already tested 1620 to 18 so many times. Let's see how market reacts next time. But as of now, okay, on Monday especially, okay, if market goes up, then buying at retracement, okay, buying at retracement is the best trading strategy, because after all, we are retail traders, we need to protect our capital as well. And if market reverses on Monday from here, personally I will avoid taking any sell position, because after this kind of volatility, taking a sell position at the resistance can be very risky. But if you are an experienced trader, you can go for it. Otherwise, I will suggest the beginners and new traders to avoid taking a sell position if market reverses, okay, because we don't have any clear picture yet. Buy at retracement is the only trading strategy that I'll recommend for everyone, or otherwise taking a sell position at 170205 for 40 to 50 pips. Let's wait and watch how the market opens. I'll update on Monday again. Bye bye, take care.